The Biden administration has put 2 new laws into place that will force big banks to stop lending to anyone that has bad credit. On today's episode, I'm going to cover how the Biden administration's 2 new laws are going to destroy the entire banking industry and how it's going to affect you.
That's why today I'm launching a new strike force on unfair and illegal pricing. Crack down on companies who break the law while keeping prices high for American consumers.
The Biden administration has made it their thing to try to save and stay face as much as they possibly could as the actual election season starts to ramp up. And what they are doing is they are going after every consumer angle they possibly hit. And one of the biggest ones that they've been targeting is using the CFPB to go after junk fees. Now, we covered this about 3 months ago, but this all is going to unravel in this single video because there's a lot more to it than just the actual junk fee. Because what happened was, the Biden administration actually lowered late fees for credit cards. So it used to be anywhere from $20, $25, or maybe $35, and now they reduced them all the way down to $8. So now people are being more incentivized to actually don't care if you actually get a late payment. $8 is not really a big deal compared to $35. So people are more incentivized to actually not to pay their credit cards on time. But the Biden administration didn't stop there by hitting the actual credit card companies. Where it hurts the most is with those late fees. They went after the actual overdraft fees also. So now you can no longer be charged more than $3. That's right, you heard me, $3 if you overdraft your actual account from what it used to be at $35 and higher. Some banks are actually higher than that, which is kind of crazy. But these fees are being reduced, and this is really going to crush the entire banking industry and cause other bigger problems as we see the highest level of defaults on credit cards in American history. The Biden administration truly thinks that this is going to help Americans, and at the end of the day, it's really not. It's going to hurt Americans because at the end of the day, what happens if the banks lose billions of dollars? They have to figure out where to get it from. They're not just going to sit there and be like, oh, okay, that's just billions of dollars just went wasted. We don't get them anymore. No, they're going to figure out how to get that out of the pockets of Americans. And on top of that, think about it like this. How is anybody going to be incentivized to actually pay their bills on time when they're already struggling financially, and they're going to be like, well, you know what? $8 is a cup of coffee. It's not a big deal. We can go and just pay the credit card late. And then one late payment can drop your credit score 120 points. That is crazy. And those late payments will be the exact reason why someone gets declined for a home, a car, or that credit card that they're trying to apply for. But this is just a small part of a bigger picture that nobody is paying attention to. Home foreclosures are at an all-time high. Repossessions are at an all-time high. And credit card defaults are at an all-time high. This is all creating a perfect storm for the banking industry, on top of them losing billions of dollars to late fees and overdraft fees. But let's focus on the actual credit card defaulting system right now, because we need to pay attention to this more than anything, because it is growing at an all-time high. Now take a look at this map right here. This is pretty insane. You have actual Mississippi is close to 40%, Texas at 25%, Oklahoma at 28%. These are insane numbers, and they are growing. Look at South Carolina, North Carolina, Georgia, Alabama. The entire South is just drowning in credit card debt. What does this mean for the actual banks? One, banks are going to sue more people because they have no choice. And two, are banks going to be able to survive and weather this storm? Now, the crazy thing is the news will turn and churn everything into what they want you to believe is actually happening. You probably saw the big news about Capital One is going to be purchasing Discover Bank.
2 of the biggest credit card companies, Capital One and Discover Financial, have agreed to merge in a $35 billion deal. If it goes through, it could have big implications for consumers.
Some people were super excited about this Capital One and Discover merger, and others were like, no, I want to keep my Discover card away from Capital One. Nobody was paying attention to the writing on the wall that Discover actually knew about previously to this actual merger. On October 19th of 2023, Discover actually put out a report that stated that they expected charge-offs to peak in mid-2024. And guess what? We're not even there yet, and Discover is already taking massive losses. Last part's the most important. In my eyes, this is not a bank merger because they're trying to merge two companies to make one big, better company. No, Capital One is trying to save Discover Bank. Let me put the chart up on the actual screen. As you can see, in Q1 of 2008, the actual default rate for credit cards Discover was 4.4%, and we are currently right now in Q1 of 2024 sitting at 5.7%. That is higher than the actual financial crash in 2008. So basically, Capital One is saving Discover Bank before it becomes non-existent and it actually has a bigger problem, and Capital One's going to be able to take over that payment system and help them actually make more money. I believe in 2024 and in 2025, we are going to continue to see more bank mergers than we've ever seen before. And the sad truth is, a lot of regional banks are going to go under and they're not going to be able to save them. But then you look at JP Morgan Chase that is actually building new locations, hiring more staff. They are one of the very few banks that's actually doing that. And you ask yourself, why are they building all these new branches and locations? Because all these actual regional banks are going to fail and JP Morgan is going to come up and scoop up that regional area. So what does this mean for everyday consumers like yourself? How is this going to affect you, you ask? Banks are going to start slashing credit card limits for people that are not using them and people that are carrying balances for far too long. And some banks will actually lower your limit on your credit card all the way down to the very bottom of the balance that you're carrying, so you have no other available credit that you can actually use anymore. Entry level for any type of credit products is normally a 660 to a 680. You're not going to get the best outcome, but you'll still get approved. What's going to happen with these banks, they're going to raise those requirements up above the 700s because they'll have no choice. They cannot continue to take risk on consumers. And this is why it's more important than ever to focus on your credit and maintain your credit in good standing. If you're carrying any balances, you need to look into possibly getting some type of balance transfer credit card to transfer that balance to get you into a better position so you're not getting eaten up by interest rates. You can also go with the credit union and do a personal loan to consolidate your credit card debt, because if you're paying 20% to 29.99% in interest rates per month, if you can get a personal loan all the way down to maybe between 8 to 10%, you've really crushed that interest rate and now you're saving money and you can focus on paying down that debt, and you have consolidated it into an actual one lump sum payment per month. But do not, and I repeat, do not talk to any debt consolidation companies because they are all a scam. What they're going to tell you is, yeah, we'll get you out of debt. We'll help you get rid of all this credit card debt, but they don't tell you the truth. And that's going to be that they need you to default on your actual credit cards. They're going to tell you to stop paying on your credit cards. You're going to rack up all types of late payments and then you default on them, and they are going to try to negotiate a settlement with the actual banks. And then they're going to charge you a crazy percentage, thousands of dollars that you're going to pay them so they can actually settle this, and you can do it literally all on your own. You don't need them. Give you a huge tip here. You can always call your credit card company or your actual credit union and tell them that you're interested to see if they can actually lower your interest rates because you've been a loyal member for a certain amount of time. You really love the bank, but you know, this interest rate's really killing you and you feel that you deserve a better interest rate. It does work with banks depending on how your relationship is with that actual bank. We've seen them actually lower those interest rates from 6 months, 9 months, all the way up to 12 months at maximum, and then it goes to the regular actual industry standard interest rate. Hope you enjoyed this video. We covered a lot about the US economy and what the news is not telling you, because I want you to be well informed so you can be better prepared. Now, if there's anything else specific you want me to talk about, drop it in the comments section, because it's all about you, our community. We cannot do it without you, and I cannot thank you enough. Make sure that you watch the next video, because it is about another big bank that you may not know about. And if you felt that I brought you some value in this video, make sure you don't forget and subscribe to increase your credit score.